Good morning and welcome to another live technical analysis. As we said yesterday, we're going to be starting off with the euro. So, for today, the main financial release of the day will most likely be the Germany's HICP rates, the preliminary rates. They're expected to accelerate to 2.7% from 2.4%. Such an event, we might see the euro gaining against its counterparts, as it may imply, and could increase pressure on the ECB to maintain interest rates higher for longer. However, we should note with the ECB's decision set to take place next week on the 6th of June, it is also coinciding with the EU parliamentary elections. As such, we may see heavy volatility in the euro in the upcoming week. So, back to the financial release. Should Germany's preliminary HICP rate come in as expected or higher, we could see the euro gaining, potentially breaking above our R1 resistance level, taking aim even for our R2 resistance level, and then higher than that, we do have our R3. Since yesterday, the pair appears to have moved in a sideways fashion, as we had said. So it's predominantly moving in a sideways fashion between S1 and R1. We would maintain our sideways bias for the reasons we mentioned yesterday. The first being the bulge bands having narrowed, implying low market volatility, the smoothening of the 50 and 100 moving averages, in addition to the RSI indicator below our chart, which actually does register a figure of 40, which implies a bearish market sentiment. But if you ignore the 40 figure and look at the moving averages and Bollinger Bands, it does also imply a neutral market sentiment. The 40 figure below our chart at the RSI indicator could be a retracement down to S1. So if it does validate our support level of 1.0810, we could see the pair continue moving in a sideways fashion. Now, with the release of the preliminary HIC periods, which I've mentioned again and again in the last minute or so, it could easily change. A figure lower than the expected acceleration could imply that either A, it has not accelerated as much, and as such, inflationary pressures may be easing, or if it does come in lower than expected, it could mean that the ECB is nearing its 2% inflation target. Therefore, anything less than the expected rate could weaken the euro. Therefore, in such a scenario, it could break below our S1 level of 1.0810, potentially taking aim even as well for our 1.0730 S2 support level. So for now, I think we can move on away from the euro. We have covered essentially what we are expecting for the euro. For the US dollar, so we will be looking at the USD JPY. We will be looking at the British pound against the US dollar, dollar CAD. As a matter of fact, I would also like to look at Euro GBP and as well as the British pound against the Japanese yen. Particularly, let's see, GBP USD, majors, looks look at the minors. There we go. 16-year highs for the British pound against the Japanese yen. But back to the euro one last time. The dollar may have strengthened since yesterday as a result of Minneapolis Fed President Kashkari's comments. Essentially, the comments appear to have been perceived as relatively hawkish in nature, implying that the possibility of a rate hike is not off the table and that the particular Fed president would require many more months of convincing data before potentially cutting rates. Therefore, the hawkish remarks, as they have been interpreted by the market, may have provided some support for the US dollar. Look at the USD against the JPY. We had noted yesterday that it was bouncing off RS1 level of 156.60. There is a bit of an issue, however, when looking at JPY pairs. So USD JPY, GBP JPY, Euro JPY. It is reaching levels that we had last seen, upon which the government intervened in favor of the JPY. Therefore, despite the hawkish comments, if you compare the dollar strengthening since yesterday, for example, let's see how many pips this was. Let's say it was 41 pips. Nothing too big, nothing too major, but it did provide some support for the US dollar. And we can actually even look at the US dollar index to see that reaction. So 18th, if I'm not mistaken, this is outdated. This is the more recent one. So 15-minute time frame. Yes. So let's take a look. Since yesterday, we have seen, so since today, 16 pip, it's nothing. So it has strengthened slightly, but not as much. And I would attribute that to the market was expecting Kashkari to be hawkish. As such, even though his comments were hawkish, it was expected. So potentially even priced in slightly, therefore not much of a reaction in favor of the US dollar, but nonetheless some support for the US dollar. Back to the USD JPY, we are now on the daily time frame, dropping down to a 4 hour. You can see there appears to be some hesitancy from the bulls to continue moving the pair in an upwards direction. They are sized at 57, some bullish tendencies, but the narrowing of the Bollinger Bands, and note how extremely they have narrowed, fairly tight, and have not taken aim for a R1 level of 158.30, does also imply the aforementioned hesitancy that we just mentioned. The issue is with the JPY is that the government intervened. So as we said before, and I now will be showing that with a rectangular shape. So as you can see, the pair moved to the 160.20, and then we saw an intervention by the Japanese government. So as you can see, there appears to be a bit of a hesitancy. The question is, will the government intervene within this range, or will they opt to intervene slightly earlier, which may provide support for the JPY? So around this level. So you have two scenarios: intervention in rectangle one or intervention in rectangle two, which are two scenarios I personally believe may occur. Now, we could be wrong and we might not see the Japanese government intervening, and it could even aim for our hypothetical resistance level at 162.0. But if you look at the price action, it appears I am not alone in being concerned about potential intervention by the government, which is why we might be seeing this hesitancy from the bulls. GBP USD, we're seeing the pound moving lower, slightly lower for the day, but overall, the British pound appears to be moving in an upwards direction. It has tested our resistance level at 1.2795. The RSI is still at 70, implying bullish market tendencies. The upwards moving trend line has been broken, but still, the degree upon which the upwards moving trend line was drawn did also imply that it could easily be broken. It's not more of a gradual slope, it was a very steep one. So, high buying pressure moving higher and higher. It makes sense that it would be broken sooner rather than later, and it does not imply a change in the overall market direction. In fact, I would not be surprised to see the pound drop back down to 1.27 before continuing on its ascent. So, a retracement to lower ground before moving higher. If it does break below S1, then I would switch for a bearish outlook taking aim for 1.2560. If it validates my S1 support level, then I would maintain a bullish outlook if it manages to break above R1 at 1.2795 within the next few days. USD CAD. So the dollar slightly strengthening on the daily against the loonie, but if you look at oil prices, they have also moved higher. One could attribute this to potentially the tensions in the Red Sea once again. A cargo vessel was struck by three missiles fired from, well, allegedly fired from the Yemeni Houthi rebels, increasing tensions once again in the region regarding the supply chain of oil, may have provided some support for oil prices. Has now broken above RR1 level, so has broken above the sideways motion that had occurred since, I'd say, the end of April. Let's see, the 2nd of May, as a matter of fact. I would now switch for a bullish outlook, taking aim for 81.10. My resistance level at R1 now becomes my support level. Our new R1 is 81.10, R2 82.08, and then taking this old high as our R3 level at 86.40. And now we will be reflecting that in our text labels as well. Note the API weekly crude oil inventories figure is set to be released today. If it comes in lower than last week's figure, could provide some support for oil prices as it may imply an increase in demand for oil from the US, from US consumers. Anything higher would imply an increase in inventories, therefore a potential reduction in demand once again from US oil consumers. Such an event could weigh on oil's price, but for now, from a technical point of view, we could maintain a bullish outlook despite the RSI being at 54 and not above 60. It has broken our sideways moving channel, thus could imply a change in the oil prices direction. R1, R2, R3. Oldest one becomes S2 and S2 becomes S3. So this becomes S1, S2, S3, and this now becomes S1. For a bullish outlook to continue, it would have to break above R1. If it does not break above R1 today, I would not maintain a bullish outlook. Instead, perhaps a sideways bias, which is fairly close between S1 and R1. If it breaks down below S1, bearish. If it does break below S2, otherwise could maintain its sideways direction. But having broken above, in addition to the mid-range of the Bollinger Bands, could imply a bullish outlook for the liquid gold's price. Onto gold. Now, gold is still slightly validating our R1 level. We could readjust this slightly higher at 2,360. Slight readjustment. Still a retracement. For the day, it is moving in a downwards trajectory. RSI resting at 50. If it breaks below, and then we see a lower low being formed, so this could be a lower high. So you have, uh, let's see how we can draw this now. So this is your most, well, your not most recent high. So this is an old high, and then we could reflect this. So this is a lower high. So you have an old high, a lower high, lower low as well. If it breaks below, so if it does break below roughly 2,325, if we're rounding it up, we would maintain our bearish outlook down up until 2,275. We are looking at gold on the daily time frame, which for I'd say scalping, not ideal. From a more macro perspective, then yes, as you can see, dropping down to the 4 hour, it is validating. It was near our 2,355 support, resistance level. Still validating it, as you can see, failed to break above retracement, breaking a higher low. Will not be surprised if it does take aim for this level that we had mentioned before. Target one would be, well, support one at 2,275. RSI at 40. Bears appear to be taking back control of the precious metals price direction. So, from a more macro perspective, we would still maintain our bearish outlook for now, as long as this low is broken in today's and the maximum tomorrow's trading session before the release of the US core PCE rates. So we've done the Aussie. For the Aussie, we do have a financial release from Australia tomorrow, but it's might have a minimal impact. More focus for the Aussie would be China's NBS manufacturing PMI figures due out on Friday's Asian session. So in the morning, we're waiting that. For now, might be moving a sideways fashion, having broken our upwards moving trend line between S1 and R1. RSI at 50 further supports our sideways bias for the particular pair. Now, the Dow Jones 30, as you can see, so yesterday's live, we were discussing the Dow Jones 30, S&P 500, and the Nasdaq 100. What we did say yesterday was that we were concerned about the Dow Jones 30 moving in a downwards fashion, whilst the S&P looked to be moving relatively sideways, and then the Nasdaq was moving in an upwards fashion. Now, the Nasdaq does appear to be continuing on its ascent. Small retracement, it's still above S1, which we do have to change in terms of our text labels, is still relatively moving in an upwards fashion. But the issue is the Dow Jones 30. It's broken below our S1 level of 39,140. RSI has dropped below 50, so coming down from 70 implies a potential switch in the primary trend direction of the particular index. I would maintain a bearish outlook for the Dow Jones 30 down to 38K. Lower than that, 37,100. And for our new S3 level, I would look at 35,000. It is fairly far away, and we could actually take this old high. Actually, let's see. So we had a bullish candle being formed. Hammer formation, accumulated buy orders on move higher, coinciding with the closing of this bullish candle. S3 would be 35,900. 7,975. So this would be my S3 level, my new S3. This is now S2. S1 is 38K. There is a bit of a concern with the Dow Jones moving higher. If you have the Dow Jones 30, which is considered to be, I'd say, as an early warning system. So in terms of if you use time cycle analysis, when the markets are going well, the Dow Jones is usually the first to respond, followed by the S&P 500, and then lastly the Nasdaq. Times of economic downturn, so when the markets are moving a predominantly downwards trajectory, the Dow Jones 30 is first to react, followed by the S&P 500, and lastly the Nasdaq. So this is a bit of a concern because if you're looking at the daily, the Dow Jones 30 is moving lower. The S&P is maintaining at our old R2, which actually we had placed at 5,275. Yet, if you look at the Nasdaq, it's still relatively moving in an upwards fashion. So it's a bit of a concern. If it does break below R2, well, S1, bearish outlook, and since the Dow Jones 30 is moving in a downward trajectory, I would not be surprised if that does occur as well. Now, our old S1 level, let's just fix the text labels quickly so we can move on. I would like to look at the British pound against the Japanese yen. 16-year lows for the yen against the British pound. Does make sense. Despite the UK's latest inflation print, a bit of a concern about persistent inflation pressures in the economy. The ECB is expected to cut rates by 25 basis points in their next meeting on the 6th of June. If I'm not mistaken, Euro OIS had it priced in at around 92%, so it's essentially a given. The Fed, I think, would maintain interest rates higher for longer than the ECB. So the way I'm seeing it is the ECB cuts first, then the Fed, and lastly the Bank of England. This is S1, S2, and S3. So R1, 39K, 39,140. Bearish outlook for the Dow Jones 30. S&P 500 resting on S1 at 5,275. S2 is 5,116. And we do have to actually readjust these so that they're easier for you to look at. And then S3 becomes 4,950. S2, yes. Turn this to green. And then this becomes S1. Now, if you're interested in US dollar and equities, this is something to watch. As we said before, Dow Jones is moving downwards. Would not be surprised if the S&P 500 follows suit, and lastly followed by the Nasdaq 100 index. But of course, we could be wrong. Core PC rates on Friday could come in lower than expected, which could upend the markets, weaken the US dollar, allow US equities to move higher, because that is also a scenario. Now, I would like to remind our viewers that we will not be having any public speaking engagements. We will not be having the accompanying press conference from the BOE after their monetary policy decision. We have the general elections in the UK coming up in less than 2 months. They stated that there will be not press conference following their decision. So increased volatility for the British pound up until the elections, if not afterwards as well. Latest polls do have the Labour Party still in the lead against the incumbent government, the Conservatives. I would not be surprised to see Labour winning the next elections unless something unexpected occurs. They're leading by 20 points. Such a lead is quite difficult to lose. Possible, but quite difficult unless something extraordinary happens. perhaps a statement that drastically impacts the perception of the British public and the voting electorate, but such an event has not yet occurred. I'll keep R1 and R2. If you would like to have R3, simply see the distance at about $100. So my R3 would be at 5,600. Simply taking the distance between R1 and R2. So, oop, uh, 50. Appears I have made a mistake. It is not 5,400. It is 54. It is 5,400. This is odd. It is fairly close to our R2. My R2 label text was wrong. That is why. So 5,450. And then R3, 5,650. And that makes sense why when I placed my resistance line at 5,600, it was far too close to my R2, which is a very nice reminder of double check your support and resistance levels and make sure that the text labels do coincide with what you have on them. So I do have my S1, S2, and S3 already placed. Bearish outlook breaking below S1 would be sufficient. RSI is dipping towards 50, which would imply neutral market sentiment. But if you look at the price action, it's also about trend line. If it breaks below S1 and takes aim for S2, I think that would be a valid for a bearish outlook. Nasdaq support and resistance levels remain the same. Daily chart, RSI above 60 implies a bullish market sentiment. But if we're seeing the Dow Jones 30 and S&P 500 move in a downward trajectory, we might see the Nasdaq moving in a downward trajectory as well. Nvidia moving higher and higher, 1,140. ExxonMobil rebounding near 114.15. But I did say I would like to see the British pound against the JPY. We already have our template. Go for our time frame. Oof. Let's drop down. 200.45 was a resistance, so the old all-time high. Broke above, fluctuating around it. RSI is at 64. Does imply a bullish outlook, but I would have to place my R1 at 200.69 as R1. For my support levels, what I'm looking at is the candlesticks and the overall market structure. So I'm trying to figure out and see where there was an accumulation of buy orders that allowed the pair to break its all-time highs, leading to the JPY reaching 16-year lows against the British pound. Accumulation broke higher. There we go. 199.75 is my S1 level. And I'll show you why now. Swing low, swing high, came back down, managed to break above, broke most recent high, but failed to break below. So it appears that where this bullish candle finished, so where it closed, there was buying pressure, noted by 1, 2, 3, 4, and a fifth candle. On the fifth candle, after the bears failed to break below, the price action moved higher and broke this high. This was not an all-time high. It just reached 16-year lows. Thus, support level S2, recent low, S3, recent high. Taking it further below would be too far away from the current price action. Also note, found support when it managed to break below though. acted as a resistance level, broken above, now acting as support. So you have S1, S2, and S3 already placed. We'll be measuring the distance between our support levels and then reflecting them higher for our resistance levels. So this would be my S1. You could also draw an upwards moving trend line, still validated, even drawn further below. Upwards momentum maintained, maintaining a bullish outlook. But if it does break below this upwards moving trend line, would not be surprised to see it move in a relatively sideways fashion for the rest of the day. Now, there is a bit of a concern once again, government intervention in support of the JPY. Such an event could easily break below S1, even S2, taking aim for S3. So, caution and extreme caution for pairs with the JPY. 6.95, send this to 24. Turn this to green, and then we would have to look at our resistance level. So we do have support already placed. So let's measure the distance between our support levels. So S1 and S2, 133 pips. $133. So 202. That would be my R2 level. Now, this is a hypothetical resistance level. As we said, we are simply extrapolating the distance between S1 and S2, and then S2 and S3. We have not seen this level being tested. Thus, it is a hypothetical resistance level. It is possible that the pair might meet resistance at a lower level or even at a higher level. Then 0.70, I think that should be okay. And then we need to readjust. So again, then between S2 and S3, 140 pips, roughly 203. Let's turn this to 24. There we go. So you have your R1, R2, R3 levels, and then you also have support. We would maintain a bullish outlook purely from the technicals, but would remain vigilant for the possibility of a government intervention in support of the JPY. We would also like to go to our last pair of the day, Euro against the British Pound. 4-hour time frame. Zoom in. Let's look at the price action. Let's also add the Bollinger Bands below the mid-range. Bearish outlook for the pair. Macro-wise, downwards moving trend line. Crossover. So bearish signal. Moving lower, RSI rebounding at 40. Bearish tendencies. I would expect this to be a retracement before moving lower. For placing our resistance levels, 0.8510 as our, not 810, 0.8515 as R1, R2, 0.8550. I'm ignoring this high. too close to my R1. If it does move higher, could easily break this old high. So I'm using this from more macro perspective. And look how it coincides with the old price action. Acted as support, now turned to resistance. And then we could use this particular point, found support, managed to break below, now turned to resistance at 0.857, actually at 0.858. If you're looking for support, I'd use this wick at 0.8480. That's my S1. Reached down, found support. Actually, yeah, 0.8483. Uh-huh. Same with the British pound against the JPY. Figure out the distance between the resistance levels and then reflect them lower. 0.8448. That is my S2. And then 0.8418 as my S3 level. So you can see downwards motion. Now, if it does break above the upper swing trend line and does test R1, I would switch for a sideways bias between S1 and R1. But once again, we do have the preliminary HICP rates for Germany coming out, which could easily change the direction of the euro against the British pound. Acceleration, inflation, and pressures could provide support for the euro. And the same goes on for the variety of pairs that we have covered. And with that, I think we are done for today. We will pick this up tomorrow, upon which we will discuss the implications following the release of Germany's preliminary HICP rates. We're noting France's and the Eurozone's as a whole on Friday and the PC rates. So during Thursday's live technical analysis, we'll have a look at the preliminary HICP rates for France and the Eurozone, the core PC rates for the US, and we will also be looking at the implications of the Tokyo CPI rates, which are due out on Friday's Asian session. So once again, we will be looking at the major pairs. We will go a bit more in depth into the possibilities and the outcomes. Perhaps we could place some more attention on those pairs, dropping down to a 50-minute time frame, discussing potential temporary support and resistance levels. We'll have a look at that, and we'll also include our fundamentals as we do on a daily basis. With that, I think we are done for today. Thank you very much for watching, and I will see you all tomorrow.
Hi everyone, welcome to today's webinar. For today's session, we're talking about custom indicators and EAs on your MT4 and MT5. So let's just go ahead and get started. As per usual, we're starting off with our risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer: this information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll look at what are custom indicators on MT4 and 5, what are some EAs that you can use, various types, and where to find them, how do you use them, and how do you backtest them. Okay, so if you guys have any questions throughout the webinar, feel free to just pop them into the chat, and I'll be happy to answer them. Okay, so what are custom indicators on your MT4 and 5? So they're basically independently developed in MQL4 by a user, functions as a technical indicator, and are basically graphical displays of custom calculated formulas. So here's an example of a custom automated daily and weekly pivots indicator. You can see here the daily line is the purple line, weekly is the blue line, and then our monthly pivot is the gray line. Another example of a pivot points indicator, you can see here, it basically works like your normal pivot points indicator where it has your pivot point, your S1, S2, and R1, which are basically your support and resistance levels. So those are pretty simple indicators. Here is an example of a more complex custom indicator. So this is on MT4 and it's for the pair pound dollar on the H1 chart. So we can see that for this particular indicator, it uses the moving average cross over the trend following strategy. So this custom indicator has multiple confluences such as moving average, ADX trend, and trend signaling on the higher time frames. So this shows us that custom indicators can be pretty flexible in terms of confluences, and users can be creative with it if they decide to create their own indicators. Okay, so what are some expert advisors or EAs? They are basically developed in MQL4 as well as 5, and it's a software that automates trading functions based on algorithm. So it basically notifies traders of trading opportunities and suggests trades that can be profitable. Different types of EAs. We have the scalping EA, news trading EA, breakouts EA, and hedging EA. So it really depends on your trading strategy and what exactly you are looking for. Here's an example of an automatic trading EA. You can see at the corner here, it tells you the spread and it tells you a suggested lot size, what margin you should use, leverage, take profit, where you should place your take profit, stop loss, so on and so forth. Similarly, here's another automatic trading EA, but it tells you the same thing. Okay, and another one, yeah, pretty much tells you the same thing, the account's profit or loss, account equity, drawdown percentage, spread, lot size. So where do you find these EAs and custom indicators? You can find them on your MetaTrader market page. Some tips is to purchase from sellers with excellent reviews and to be careful of any advertisements and to test these on demo accounts so that they don't affect your capital. Next is Fiverr. So it would be helpful to engage a coder if you have a specific strategy for your custom EA. This also allows you to white label your service after licensing your custom EA. Okay, Forex Factory website. So we have mentioned Forex Factory in the past, but more so for the economic calendar. But they also provide you with some recommendations for best expert advisors that are free. Or, of course, you can simply Google it as well. So, how exactly do you use them? So, you double click the EA that you would like to use on the Navigator tab on your MT405. Enable the following options and then click OK. So, you allow live trading, allow modification, and DLL imports. And yeah, there you have it. So now let's look at how you can backtest these indicators. So just an overview of backtesting, it basically uses historical data to test your strategy and allows you to understand the behavior of your strategy so that you can fix it and improve it. So what exactly it is, backtesting in trading is basically simulating the process of trading while using a set of rules over previous price data to see how much money would have been made or lost if a trader had followed the same strategy. So it's basically a retroactive test where a trader enters a set of values or rules like a currency pair, time frame, and technical indicators. Then the automatic backtesting trading system can analyze the tick data and show you what would have happened if you had taken the chosen strategy. Some things to watch out for would be your net profit or loss, volatility measures, averages, and ratios, and analyzed return. Okay, so what is tick by tick backtesting? It's basically it uses in-depth data and volume weighted into price. It involves creation of elaborate models and it prevents unexpected surprises and it also simulates your trade execution. So this is an example of what your backtest report looks like, and there are four key areas that you will need to look at when you produce your backtest report in MT4. So that would be those highlighted here, your total net profit, maximum drawdown, total trades, and profit trades. Okay, so what exactly they mean? Firstly, total net profit is the overall financial outcome of trades generated by a trading system if it had been used in the past. So it indicates the potential profitability of a strategy, although it doesn't guarantee future performance. This parameter provides an estimate of the potential gains from using the system. Secondly was maximal drawdown, and this refers to the largest loss experienced by the trading account in both monetary value and percentage relative to the account balance. So a lower drawdown is generally preferred, but it depends on the trader's risk tolerance and account size. So for example, if a trader has $10,000 with a risk tolerance of 20%, the maximum drawdown should not exceed $2,000. Number three is total trades, and this represents the overall number of trade positions taken by the trading system. So it helps to assess whether the strategy is aggressive or moderate by comparing the number of trades to the investing time frame. So for instance, if there are 200 trades in 3 months, it indicates an average of 3 trades per day, making it suitable for intraday trading. A smaller number of trades may be better suited for mid-term trading. And lastly, the key point that we will look out for is profit trades. And this indicates the number and percentage of profitable trade positions out of the total trades. It reflects the trading system's win ratio with a higher percentage, indicating a more successful system. Okay, so some common backtesting mistakes would be having unrealistic backtest results, do not overmine your data, getting the timing right, and incorrect assumptions. So how exactly do you backtest them? Okay, so you basically want to open your MT4 and click on the strategy tester button over here. But this feature is not available in the mobile version of MT4. Okay, and then this is what it'll look like. Click on Expert Advisor, input the EA that you're looking at. Okay, and then once it fully loads, you can click on Start. Yeah, so basically these are the steps. Select your EA, set your dates, and press Start. Okay, and then this is the Graph tab, what it basically shows you. And if you want to look at your results, that's just basically the Results tab. So it'll tell you the number of orders that you've put in, the lot sizes, and the profits or losses that you've made. Okay, and lastly would be your report tab. Yeah, so you can see it's basically a summary of your trades. So your profits, your losses, yeah, number of long positions won, short positions won, so on and so forth. Okay, so how do you decide whether to use MT4 or MT5? Let's do a really quick, brief intro to both of these platforms and compare them so that you can see which is more suitable for you. Okay, starting off with our intro to MT4, when you go in, this is what the interface looks like if you've never used it before. So it was launched in 2005, and MT4 has become the industry standard for Forex trading. It's renowned for its user-friendly interface, robust functionality, and extensive range of features tailored to both novice and experienced traders. So its key features include ease of use. So its intuitive interface makes it accessible for traders of all skill levels. Platform's design, you can see, is pretty simplified. So it's easier to manage your trades and conduct your technical analysis. Charting tools. So the platform offers advanced charting capabilities with various timeframes and a wide range of technical indicators. So you can see all of the tools that you need are right at the top here, or you can click on tools as well. Yeah. So you can customize your charts and indicators to fit your own trading strategy. Automated trading. So this MT4 also offers the ability to support EAs that we went through earlier, reducing the need for constant manual intervention. Security, MT4 is quite secure since it has data encryption to ensure the safety of trades and user information. And lastly, community and support. So a large MT4 has quite a large active community of users who share their strategies, their tools, insights. So it is a pretty collaborative trading environment. Now if we look at MT5, So MT5 was released a couple years after MT4 in 2010, and it was designed to offer enhanced trading capabilities and broader market access. So while maintaining many of the features that made MT4 popular, MT5 introduced several improvements and new functionalities, such as its multi-asset trading. So the main difference between MT4 and MT5 is that MT5 supports not only forex trading, but also stocks, commodities, and futures, and even crypto as well. So it makes it a multi-asset platform suitable for a wider range of financial instruments. Enhanced charting and analysis. So MT5 includes more time frames and built-in technical indicators than MT4, along with additional tools for comprehensive market analysis. So we'll go through what some of these differences are in a bit. Next is another difference is the economic calendar. So you can see below it offers you this tab, this calendar tab, and it features an integrated economic calendar, providing traders with real-time news and data that can impact market movements. Um, Hi, yeah. Has this webinar been? So this webinar is being recorded. If you would like the recording or you would like to rewatch this webinar, um feel free to email IronFX, the team. I think it's on the website. Yep. If you just search up ironfx.com, it should be on the website. Just email them and they can help you out. Okay. Another difference is the improved order management, which is more sophisticated order types and execution options. It also boasts faster performance and deeper market depth information. So that basically includes, it basically provides you greater insight into the liquidity and order flow of a given instrument. Okay, so MT4 and 5, some key differences. So here's a table, a summary of all the differences between MT4 and 5, but basically it depends on your needs and preferences. MT4 remains a favorite for forex traders who appreciate its simplicity and the extensive library of available EAs and custom indicators. And on the other hand, MT5 is better suited for traders looking for a more versatile platform that supports multiple asset classes and advanced trading features. Both platforms are available on various devices, including your desktops, mobile, and tablets. So you can access the markets from anywhere, anytime. Okay. So some key differences in the tradable instruments we mentioned earlier. MT4 only allows for Forex. MT5 offers commodities like your metals, energies, stocks, as well as indices, and some crypto as well. Time frames. So MT4 only offers 9 time frames, which would be your basic M1, M5, M15, M30. Hourly time frames include your H1, H4, daily, weekly, and monthly, which is enough for swing and long-term traders. But if you prefer to get a deeper analysis, you can look at MT5, which provides 21 time frames with way more minute time frames and hourly time frames, as well as the daily, weekly, and monthly time frames. Okay, MT4 has 31 graphical objects such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. So if you think that's enough for you, MT4 might be a better option. On the other hand, MT5 offers 44 graphical objects, including geometric shapes, channels, Gann, Fibonacci, and Elliott tools, and more. Okay. Next is trading orders. So MT4 offers 4 types of orders: the buy, stop, buy limit, sell, stop, and sell limit. Whereas MT5 offers 6 types of pending offers. So pending orders rather. So there are those that are offered by MT4 and 2 more: the buy stop limit and sell stop limit. Okay. And of course, we mentioned earlier the economic calendar. So there is no built-in economic calendar in MT4, whereas MT5 offers an integrated economic calendar with useful and real-time info about macro events. But if you are more inclined to use MT4, there are a bunch of free economic calendars online as well, so it's not too much of a worry. So if you take a look at my screen now, this is just an example of the uh, economic calendar that we prefer to use. This is forexfactory.com, and it has a bunch of indicators. But if you click on a date, you can look at we prefer to look at the weekly forecast. So the events for the upcoming week. But if you prefer, you can look at the entire month as well. Okay, so by clicking on this filter here, I normally like to look at the medium and high impact events that are indicated by this orange and red icon. Yellow is low impact, gray is bank holidays. So you can also look at the different currencies. You can narrow it down to just the currencies that you're trading and the different event types as well. So yeah, then we have all of the events for the upcoming week at one glance, and the currencies that they will be impacting, the forecasted values, previous values, and it also tells you the actual data once it's released. There are a bunch of forums you can take a look at as well. Yep, some news as well from the different news outlets over here. So yeah, that's so MT4 not having a built-in economic calendar isn't that big of an issue, since there are a lot of economic calendars out there that are free to use. So the one that I went through earlier is forexfactory.com, but there's also investing.com, or Baby Pips also has a bunch. Okay. So MT4 versus MT5, which is a better pick? So some pros and cons of MT4. Pros: MT4 is perfect for beginner traders because it's easier and simpler to use than MT5. And MT4 is the best platform to trade Forex, as it was initially designed for the needs of Forex traders. Some cons is that it has fewer trading options than MT5, and it's a little bit slower than MT5. MT5 allows trading Forex as well as stocks, indices, commodities, and crypto, has more charting tools, technical indicators, and timeframes than MT4. Some cons is that the MT5 can appear to be more complex platform for beginners, and there are fewer robot and expert advisor developers who opt for MT5. Okay. So some tips for MT4 and MT5. Firstly, would be to use the MetaTrader Market Scanner. Second, create custom indicators, use EAs. So we already went through at the start how to create your own custom indicators and use EAs. Fourth will be to manage your risk, and we'll go through some tips on how to do that. Stay disciplined and have realistic expectations. So let's talk a bit about how to manage your risk now. So here we have the most basic trade management tips. So here by confluence, we are talking about Fibonacci confluence, which basically occurs when two or more Fibonacci levels line up in the same area. But this also applies for resistance areas or any pivot point levels. So for your stop loss, we typically recommend you to place it um, beyond a key level. And the reason for this is because more often than not, price is attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before the market reverses. This is one of the reasons why most people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. Okay, and as for your take profit, we recommend you to place it before any key levels. Reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. So that's also one of the reasons why people complain that the market is being manipulated because they missed the take profit by 1 pip. Okay. Yep. So in this example here, we are going in for a buy entry. So obviously we would place our take profit above and your stop loss below. So in this case, when you're going in for a buy entry, we'll place our take profit and stop loss below your key areas or your Fibonacci confluence areas. Okay, so for buy entry, place it below. For our sell entry, which is in this example, we'll place your before take profit and stop loss before any resistance areas. So basically like above it, like this. Okay, so again, for buy entries, we'll place it below your key areas, and for sell entry, we'll place it above it. That's an easier way to remember. So yeah, this is the proper stop loss and take profit placement to ensure that you maximize your wins and minimize your losses. Okay, so some other trade management tips, especially if you are trading on your MT4, MT5, would be to use a trading journal. So here's some tips on how you can set it up. And it's relatively straightforward. So firstly would be to choose a format. So this can be, you can opt for a physical notebook, a spreadsheet, a digital document, or specialized trading journal software. So it all depends on your preferences and the level of detail that you wish to track. Number two is to decide on the categories. So this basically means to define the categories of information that you want to include. So it can be the date and time, trade symbol, entry and exit prices, position sizes, stop loss, take profit levels, trade duration, and trade outcome. You might also choose to include trade rationale, market conditions, and emotional state. Capture trade details, that basically means recording any relevant information and being consistent and diligent in entering the details accurately and promptly after each trade. Analyze trade performance. Basically, you are going to regularly review your trading journal to analyze your trade performance by looking for patterns, trends, and areas for improvement. Emotional factors. So this is quite important and quite often overlooked because it's important to take note of your emotional state during each trade. So how you would record it would probably be taking note of any emotional biases such as fear, greed, or overconfidence that may have influenced your decision making. So, this information will help you to become more aware of your emotions and develop strategies to manage them more effectively. Review and adapt. So, again, you want to learn from your past traits and experiences, identify areas for improvement, and refine your approach. And lastly, maintaining discipline, basically ensuring that you treat it as a crucial part of your training routine and commit to using it consistently. Okay, some benefits of using a trading journal include performance analysis, which is basically allowing you to analyze your trading performance in a systematic and objective manner. And secondly, learning and development. Um, this is pretty straightforward, but basically it's reflecting and learning on your decision making process, identifying errors or missed opportunities that enables you to continually refine your trading strategy. Emotional awareness, we talked about this already. Risk management, we talked about this as well, but it basically involves recording position size, stop loss levels, risk to reward ratios as well, so that you analyze how effective your risk management strategies are. And that's quite crucial as well. Trade planning and execution. So this basically involves providing a record of your trade setups, including the analysis and rationale behind them, and accountability and discipline, pretty straightforward, and confidence building. So a trading journal can help you to boost your confidence by documenting your successes and your learnings, and you can review your progress regularly and build confidence. Additionally, having a record of successful trades can serve as a reminder during challenging times, reinforcing your belief in your trading strategy. Okay, that's it for my slides. We still have some time left, so let me just pull out our charts and we can take a look at maybe one or two charts together. So if you have any requests for any charts that you want me to go through, just pop them into the chat. Okay, are there any specific charts that you guys want me to go through? Okay, I see we have a request for AUD. So let's take a look at that. Okay, so I like to start off on our weekly time frame so that we get an idea of where prices are headed towards. Now, on our Aussie dollar, you see prices moving in this descending trend line. And you can kind of see price approaching the trend line again. Now, on our daily time frame, prices are kind of fluctuating a bit more, moving sideways. Now, on our 4-hour time frame, it's also kind of, it actually looks like prices are moving upwards. Yeah. Okay, let's see if we have any trend channels or trend lines here. Okay, we actually have prices moving in this ascending trend channel. Okay, so I'm just gonna go ahead and analyze this on our 4-hour time frame. So I'm gonna place my pivot over here. You can see it's a good habit to try and pull back your level as far as you can so that you can see how significant that level is. Okay, so you can see here I have a couple of swing highs that have tested this level in the past. Okay, this is my pivot and my first support, or rather my first resistance. Mm, maybe up here, and my first support over here. Okay. Okay, now I'm going in with this Nike tick shape here, which we call Fibonacci extension, and 161.8 lines up nicely with our pivot. Okay, now I'm going in with a retracement. Okay, and you can see my 50% lines up with my pivot. Again, going in with my projections. Okay, my 61.8 lines up with my pivot as well. So you can see this area here where my pivot is at is a pretty strong confluence area. Okay, because we have 3 levels lining up. Okay, I think that's all the levels that we have. Okay, I'm gonna move my first resistance down. Maybe over here. Okay, and I'm gonna go in. So we are expecting price to continue in this ascending trend channel. Okay, but we are aware of this confluence area here as well, which might have a bit of resistance. Now let's look at our indicators. We have our Ichimoku and MACD. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it supports our analysis. Now if we look at stochastic, okay, stochastic isn't telling us much. If we look at RSI, okay, on our RSI, we see prices moving. We see prices moving in this ascending trend line. Okay, so yeah, pretty bullish signals here, just highlighting this confluence area with multiple swing highs and one swing low, as well as 3 Fibonacci levels forming a confluence area. Okay, any other requests? Okay, any other requests from you guys? Okay, if not, I think that's all the time we have for today. Thank you guys so much for joining me. If you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.